The setup you guys are going is definitely interesting. So what your people get to stake their deadheads, and in return they get dead token for staking it, and it also allows you to use their deadhead in the show. Was that the case?
Yep. And then those tokens can be used to purchase assets from the content that comes out of the Deadhead animation team.
Gotcha. Are you gonna put them into a liquidity pool and give them an ETH pairing, or are you just gonna use them as only purchasing rights without value?
We gotta still work that out. Like a lot of the stuff that we are coming up with right now isn't public just yet.
Yep.
But we will be releasing a lot of stuff really soon, just kind of like on all the mechanics around it. But even just like having a little bit of value tied to the tokens coming out of the of staking NFTs, like that topic in general, like with what was it, stacked toads and everything like that too, right? Or was it stacked toads?
Yep.
Yeah.
Yeah, stacked toads. You stake whatever amount of toads, and you get 50, whatever the currency is a day per toad.
And those tokens can be then used in a game, right? In order to play the game.
Yeah, so they did a partnership with some company that's releasing these arcade machines, and you can use these things hand in hand. You can use the tokens to use machines and play the game, I believe.
See, it's going to be really interesting to see like how projects tie value to the tokens that are coming out of these contracts.
Yeah. To be honest with you, right now they're not really tying value. Obviously, in the Toads case scenario, you need to own the token to play the game. But there is the free generation aspect. But for anyone outside of the Toads community that wants to play the game, obviously they're going to need to buy these tokens, and that's where the value comes in there. That is the reason why people will need to interact with the liquidity pool. Or if you're just addicted to playing the game, you might want to buy some more on top of the generation from your Toad. But maybe you guys should implement some sort of protocol fee somewhere. Maybe it's just a small fee in every time someone purchases an asset in the show, and then that just goes straight to the liquidity pool to add value for the currency in a pairing.
Yeah, it could feed into it. No, not bad. I like that. Yeah, no, it's.
I just wish Solon was live to handle it, man.
Right there with you.
But yeah, Squirtle, if you ever have any I barely do any development. If you ever have any higher level questions, I can always ask, or you can always ask Ben, who's the CTO of Solon. He's like within the top 50 Solidity developers in the world.
Love it.
So, yeah, just let me know.
No, for sure. The other half of it is like all the legal concerns.
Oh, I know.
Too. Like right now, like everyone's just kind of like flying by the seat of their pants. Like, oh, let's do it.
Yep.
But it's going to be.
But yeah, no one knows what the SEC and all these entities are going to do. It's a bunch of 80-year-old white dudes at the end of the day, and they can basically do whatever they want. I mean, the problem there is really the base structure of Deadheads, to be honest with you. That's why we're setting Solon up as a completely decentralized project. This way, there's essentially no entity at the head. Everything is equal. It's completely decentralized. It's completely distributed. And obviously with Deadheads, Jeremy and Tempo are at the head of it's not even an LLC, because you can't have LLCs in Canada. I believe they have an incorporation or some sort of corporate entity. But I mean, at the end of the day, that gives them liability because they are centralized.
I think this is like a interesting subject that's like kind of like a two-edged sword. It's like the consumer person in the NFT crypto space. I mean, if you're a diehard crypto evangelist, you're all about decentralization, then you're all about the DAO and everything. But I feel like your average customer wants someone to look to, wants someone to be able to handle stuff if there's issues, and wants someone to hold accountable. And that's just like a tough thing for your average consumer to wrap their brain around. That this is like an anonymous.
It's everyone. Everyone is part of the organization. Everyone has collateral. Everyone has a voting power. And at the end of the day, the way Ben and I have set things up is technically everything's completely decentralized. We even have to buy our own supply of the cryptocurrency. But obviously, we're releasing the full completed protocol, and then the decentralized aspect goes into place. We're developing everything. We're developing the protocol. We're releasing it together with the DAO, everything completed. And then it'll run for the rest of the time from there. Obviously, we'll continue to contribute to the protocol for the rest of the time. We're always going to contribute to develop, always continue to make partnerships and work on deals and everything. But technically, the way it works, the way the DAO structure is set up, is anyone in the ecosystem could contribute development, or anyone in the ecosystem could work on marketing or development or partnerships or any of these things. And essentially, they propose their work to the DAO, and then the DAO votes to implement it or not. What's up, Crypto Pigeon?
Hey, how's everybody doing?
How you doing?
Doing good.
Good. Is there a way to see how many NFTs are left? I've been trying to buy since yesterday. It's just I bought ETH on Coinbase, and they don't allow you to transfer out until the funds clear, and it's still taking a few days. So I just don't want to miss out.
Yeah, so right now there's 1,182 minted. So let me see.
So that's if we sell 18 more, then the next 100 get revealed, correct?
Actually, Ben set it up so they're getting revealed basically almost. He created a program that automates the reveal process with his code that holds the metadata. So yeah, there's 854 left. By the way,
Okay.
Squirtle, Ben created the first program where, let's say, you don't sell out an entire collection, or you sell it over a period of a few days, where you don't have to reveal the metadata of the whole collection, so people can't game the system. They can't look and say, hey, I know this next mint is going to have these properties. He made it so, you can only release the metadata of up to a certain ID. And he just created this program. And then on top of that, he just created a program that automates it every time a new one is minted. So now it's all automatic.
I like that.
All right.
That's really cool.
What's Ben's Twitter? How can I find him?
I'll pin it up here. Ben just made a Twitter recently. He's got like no followers, so everyone's got to go follow Ben. Here, let me see.
I follow Ben.
While
he pins that up top, I'm just going to say my name's John. Welcome to the space. I'm talking with Crypto Jesus of Solon DeFi, and this is just an open conversation we're having today. You will hear some about Solon DeFi, and this is just a place for us to kick interesting crypto topics, NFT topics, in the space in general. Anything that applies, you're welcome to bring up and come talk about it up top. This conversation is being recorded. What we do is we post it in the Solon DeFi Discord, and it's there for anybody to review later on if they missed it. So I just wanted you guys to be aware. And if you aren't in our Discord, definitely come and join us, where you can ask any question. Never a question that's too dumb. We're generally a helpful bunch. And just so everyone is aware, again, the NFT is still minting, and you can go ahead and grab that off the Solon.finance site, where under the NFT tab, you can just connect your wallet and mint right there.
It's good to see everyone in here. Good to see you, Aratatech. I know I totally butcher your name every time I say it. Good to see you, Bugsy. Good to see you, DBL. Max, good to see you. Don't hate, celebrate. Everyone, thank you for being here. Johnny, Mile, what's up, guys?
Hey, I had another question. You mentioned when the protocol is up and running, like you guys will still be contributors, other people can contribute too with marketing, etc. Like how would that work in terms of incentives when it's up and running and it's even more decentralized and people are taking on those roles?
That's a fucking great question, man. So basically, the way we have things set up is the DAO will. Anyone can. So we have our on-chain, off-chain structure. So everything will start in the off-chain. So someone will say on the off-chain, "Hey, I propose this work," and then anyone can review the work, and then it gets up and down votes. Everyone has one vote. That way, if the majority of individuals agree on it, it goes to the on-chain system, where they then vote to implement it. So the person who gives their proposal will say, "Hey, in order for implementing this work, I'd like this amount of ETH in exchange." And then the DAO will vote if they think that's too much ETH or too little ETH, whatever they want. And then if they agree to implement it, to basically integrate their work on chain, then they have to send them the ETH. It's all automatic. It's all on chain. So it'll basically say, implement this amount of code will automatically get integrated into our database on the blockchain. In exchange, X amount of ETH will be sent to X wallet address. And it's all automatic. And that ETH comes from the DAO's pool of money, which is essentially all the money generated from protocol fees and protocol fees are just fees taken from normal users using our ecosystem. And the majority of those fees will come from the decentralized exchange side of things. So every time someone buys or sells a fractional NFT, which is represented by a cryptocurrency and has a liquidity pool, or every time someone trades a cryptocurrency, or every time someone exits a liquidity pool or enters a liquidity pool and their assets have to get transferred into other assets. These are all examples of when protocol fees are taken, and that those fees, the majority of which go to the liquidity providers, but a percent of that will go to the pool, the essentially an address that's controlled by the DAO as an entity.
Okay, that makes sense. So it's like a bounty structure. Like I see a problem or
Exactly.
opportunity, and then people vote on it, and I get compensated to go execute it.
Yep. So you actually get your compensated. So it works two ways. So you can either get the compensation after creating it, or we can go and seek you out and you can essentially get it within the process, because we have our rentable NFT factor that I was telling you about in Solon works. So essentially anyone can basically, it's like Fiverr, except, they get the entirety of the sum. So anyone can essentially put themselves up there. They have a blockchain indisputable resume, which people can only contribute to their resume if they've contracted them through our protocol in the past. And we can essentially rent them out for development work, agree to pay them whatever amount of ETH. They do the job, they get the money. If they don't do the job, then they don't get the money. It's that simple. And we have obviously these group of people in the DAO that will validate if they've done the work right or not, because anyone in the DAO can propose, hey, they didn't do the work, they shouldn't get the money, and then people will go and look at it and come to a 60% agreement or not.
I don't get the rentable NFT part. Sorry if I'm kind of taking up the conversation, but
No worries, Miles. So we have a diagram that's pinned in the Discord in the general chat that is basically like a flow chart that will show you exactly how it works.
Okay, cool. I'll take a look at that.
I wanted to actually ask Squirtle, if you don't mind, as much as you're able to publicly, can you kind of explain how you bought a house using crypto in part, as much as you're comfortable? Because I'm sure most people
I didn't
in
hear
this
about
room,
this. That's sick as fuck.
I'm sure most people have never done that, or just how you held your money, in crypto before you made the purchase. I'm sure everybody would love to hear like how that went down.
Yeah, I'll review it like high level, right? So it's actually really straightforward. It comes down to a couple things I wanted to achieve, which was one, not selling my crypto and taking any tax hits, and then also doing it in a safe manner where if the market corrected to kind of like extreme history, like extreme cases in history of like 65% or something like that, 90%, like I wouldn't be liquidated, right? So the key was having enough collateral to make sure that I am borrowing against it where it could absorb more than enough of a market downturn to not be liquidated and then still earn yield on the collateral and the borrowed amount. It really it is such a flip of trying to borrow money or even just spending money on like a very large purchase, but then not receiving a benefit for holding your assets while you're doing that as well. And then you can also easily find protocols where you end up at a positive rate where you are actually making money by borrowing, which is also fun to say the least.
So for everyone to understand it simpler, you want to give an exact example of like, hey, I staked this here or blah, 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 blah.
I'll be a little ambiguous with it, but one example I will give, which I think is really interesting, is Alchemex, where it is a self-paying loan protocol that deploys assets to Yearn to then earn yield. So basically, you could put in, say, 1 ETH into Alch, right? You can borrow 50% against that. And then your money is locked in there until the protocol pays back your loan, and then you can get your collateral back. You can do other things like on Maker, where you can then just put in it like standard, like a whole bunch of ETH, a whole bunch of wrapped Bitcoin, and then borrow against it at a particular rate. there's a couple platforms. You got Aave, you got the new magic internet money with Spell and everything like that, and Arbitrum and Mainnet and stuff like that. There's a lot of options out there, and there's a lot of different benefits for borrowing and providing collateral. You just got to find what fits, best for you.
Needless to say, none of this is financial advice, everybody. This recording will be on the Solon NFT Discord if you want to go hear it again. I totally recommend, like, the things that Squirtle just rattled off, all fantastic things to look into and do your own research. But just so you know, those options are out there. I mean, earning a profit on your debt, that's amazing. That's an amazing thing, and I've heard of Alchemix, and it's a pretty neat platform, and definitely worth looking into.
I'll definitely have to read their audit at some point, Squirtle. Do you know who audited them?
Off the top of my head, I don't know.
Yo, Bully, what's up, man? You're upside down today?
Yo, I'm short. It's funny you guys are talking about Maker. I'm over here trying to find an entry.
On MakerDAO?
Yeah, MKR.
Oh, sweet. Yo, the Maker coin is quite interesting because, as you know, it gets burned every time someone puts up collateral into their smart contracts to generate DAI. So the supply is always decreasing, but I forget what other stablecoin it is that's also decentralized. I was listening to VB talk about it on some podcast. He was actually the Bankless podcast, John Sims. But
Frax is one to look into.
Yeah, the problem with Maker is you can basically use almost any asset as collateral to generate DAI. But I forget what this other one is, but I think you can really only use ETH, which makes a lot more sense in terms of creating a stablecoin that is, less risky.
I think that's liquidity.
Yeah, exactly. Yes, it needs to be as liquid as possible.
It's called LUSD, I think.
Oh, that sounds about right. Thank you.
Yeah, because the biggest issue that a lot of
nice. Thank you.
Decentralized stablecoins run into is they just end up relying on USDC, which is a centralized
Yeah, yeah, exactly, and that's a problem.
But also, just to add on to my note earlier, when you're interacting with DeFi and interacting with like large sums of money, always keep in mind that there is a level of risk with interacting with smart contracts. Like, all this is very new still. Like, even like the big blue chips like Aave, MakerDAO, Compound, like all these are maybe a year or two at most. Like, that's not a lot of time. Like, there was just that big bug with it was Compound, where it gave out like a bunch of the
70 million.
Exactly.
And they got it all back.
Yes.
It's also the beauty of DeFi.
Yeah, but I mean, it is good to keep in mind too. Like, in that case, it was obviously a single contract, and they had a fucking shit auditor. An auditor is really important, really valuable at the end of the day, because it's not worth going cheap on any fucking audit. Even a single contract that they might have thought for them was simple to code. But clearly, someone was able to find a loophole in there and take advantage of it. And,
they were saying it was from like an aspect of the entire protocol that like they just didn't think needed that much review.
Yeah, that's the problem.
They needed it, but
yeah, I was talking to the guys at Consensus about this Squirrel. They're like, it's always one of two things. Either the devs they have too much pride and they don't want to be able to admit that there could be a problem with the code because they feel confident in it, or it's a money thing. It's always one of the two things. But don't ever get your confidence or pride. Don't let it ever get in the way of, what could potentially be an individual's entire sum of money. It could be someone's life savings, and it's really not worth it at the end of the day to preserve your pride. And, that's why here we've raised all this money to pay for the best auditor. Consensus, Open Zeppelin, and I forget whatever the last one is, are the best 3 auditors in the world. And Consensus' specialty is automated market makers, which we are. They did the audit for Bancor, they did audit for Coinbase, they did an audit for Balancer, they did an audit for SushiSwap, and they've never made a mistake that's actually cost anyone money. And that's what we're paying for here. That's what matters at the end of the day. because a single mistake could potentially cost $70 million, like David was just saying, or hundreds of millions of dollars. And to us, we're paying for the best, and that's why we raise the funds here, because it's not worth skimping a little bit for a mistake like that to happen whatsoever.
And that's why I push you guys so hard, is because like I've been in this space not long, right? I've been in since January, and like that doesn't like I've listened to so many people talk and so many promises and roadmaps. Like any Joe Schmo who could build a nice website with a roadmap was making a coin, right? Like, so that when I heard you, bro, like it was something that clicked with me. That was like, okay, these are the rare finds where it's like in this space are the ones that are essentially going to last. So huge props to you. But I want to comment kind of like sort of like big props to you on what you're doing. I'm going to give you guys some little insight on the financial side, right? So that's kind of my background. And I was reading, obviously, like all I do is read all day about this stuff. But what I found super interesting is I do the same thing. I deposit, though, into a centralized institution. I don't trust the protocols just yet. Because like he said, it's barely a year or two old. And at the end of the day, like I can't take that chance with my family's and friends' money. So I put it in a somewhat centralized institution.
See, for me, it's the opposite, because to me, a centralized institution could always run away with your money.
So it's
these people have control of your Sure, it is, but is it?
But there's a bit of Lindy effect with
it's a little bit of both. It's a little bit of both, right? It's not 100% centralized.
Their insurance may not cover the entire sum. You may get your money back off of like 8 months. All these things are possibilities. And
sure.
With DeFi protocols, it eliminates all this. And what you really want to make sure at the end of the day is just that they were audited by an accredited auditor, and then you really have no concerns.
Yeah. So here's the other thing. That's 1,000% a legitimate point of view. 1,000. That's a fact.
Hold up. I got to reconnect. I think I got rugged. I can't hear
anyone. Can you guys hear me?
Yeah.
I can hear you, David.
I can hear you, David. I would love to hear what you were about to get into.
What I was gonna say was the ones that actually pay you now. So like Key, it's MAI is the stable coin on Polygon. And you literally, it's 0% cost to essentially borrow, and they actually end up paying you. The only thing that you do is pay back 0.5% when you actually go to reclaim your assets. Now, here's the interesting part that I came across, right? Not only is it free to borrow, right? But in the eyes of the IRS, if you're living in the United States, I can't speak to any other jurisdiction, but I'm in the process of building a business off of this, is when you think about art, right? And the way art has, like, literally, it's transferred generational wealth for the rich. And how do they always end up paying the least amount of taxes? Is because they borrow money. Now, when you borrow money, right? And that's what cryptocurrency is. That's what ETH is in the eyes of the law. When you borrow money, right? You don't have any tax liability, technically and legally speaking. I'm in the process of talking with the tax attorney.
I wouldn't say in the eyes of the law, buying ETH is not borrowing money. It's
not borrowing ETH, meaning having a tax liability, right? So what is a taxable event? So if I buy ETH at 3,000 and sell it at 3,500 in a regular account on Coinbase, that's a taxable event. I'm going to get a 1099 from Coinbase. But if I deposit my funds into either a protocol or, let's say I use Nexo, or into a centralized, decentralized institution that there's insurance, and I borrow against my assets, that's a loan that I'm paying back. So as long as I keep that loan open forever, what I'm trying to essentially, like right now, is confirm is, how do I have any tax liability? If in the eyes of the law, and the SEC has already stated Bitcoin and Ethereum are currencies, right? They can't go back on that now. When is the IRS going to fight with the SEC? And there's a little bit of a gray area, but I'm trying to get confirmation on it. If that leaves this room, I'm going to kill anybody if I see anybody run with this idea.
I wouldn't take that. I wouldn't take that as financial advice.
Agreed.
I've talked to a few lawyers from Lock and Lord that specialize in this. I got to pay this guy $1,500 an hour, so I hope he knows what he's talking about. But there is so much gray area in this space, and keep in mind, whatever you do, you better keep it kosher as fuck. Act like it's real cash, because at any point in time, the SEC could go back in a five months ago, a year ago, whatever the fuck they want, and say, hey, we made this law or we made this implementation here. We don't agree with what you did here, and they can sue you. This is a possibility, and I got this quoted from Locke and Lord.
The aspect that I'm really looking at is the gray area is APY earned on collateral. So will that at some point come back to be, hey, these are earnings that you have to pay taxes on? Or
that's why the SEC is suing Coinbase. Right?
Yeah.
Like, they're not allowing them to literally give people 4% on their money for keeping it on an exchange.
Right now, you have to pay taxes on that. It's just to them,
but
to
it's
the
not
SEC.
realized.
I'm pretty bullish on that, by the way.
Yeah, right. To the SEC, they're considering it. Hey, this is just like you investing in an index fund, like a 401k, which you get 4 to 8% on a year, right? Well, your yield is to them is the same thing, and that's what they're going to classify it as right now. Assume, and this goes for everyone. Assume you will have to pay taxes on every single dollar you profit off of, on all your gains. Make sure you set aside enough money to pay taxes on every gain everywhere, because half this space is a fucking gray area right now. And sure, no one really knows exactly what's going to happen, but always assume for the worst case scenario, because institutions.
Real quick, I want to clarify one thing there. Like, you're 100% right. The difference, and that's something that I took into consideration, obviously, is you always want to have the money on the side just in case, because anything can happen at any point, right? But you can say that pretty much about anything, which is why I don't earn yield on the assets that I borrow from. So the SEC, nobody could tell me anything. I'm not earning any yield. I'm literally taking out a loan on my cryptocurrency. So I'm just borrowing against it while not earning any yield. So there's a savings wallet and a credit wallet. And in my credit line wallet, that's what I'm borrowing against while not earning a single dollar. So that's super important
that's
to know.
Super clean. Yeah. That's a very clean approach, because it'll get interesting to see how they handle protocol tokens where, like, you deposit it and then you earn like a 0.02% or whatever on your ETH, right? And that just keeps building over time. But you never realize it because you don't take it out of the protocol, because you keep borrowing against it. So that is like the gray area that we're very much getting in the weeds. But like,
that's like
They'll
right?
never let you get away with that. No way.
That's like
will catch up
right?
with you.
Let Artoratech hop in. How do you say your name, by the way, man? I don't want to keep butchering it.
Yeah, that's why I actually jumped up here, because I was like, well, all right, I'll teach you how to say it. It's Era Haddock, but you can
Era
just
Haddock. Okay,
you can just call me Era. You can just say Era.
I like Era.
There we go. I was just asking, is Squirtle, were you just talking about basically an Alchemix setup? I got into Alchemix really early on, but then NFTs took me away. So I was curious about that.
Yeah, I mean, it's common across a lot of like collateral and borrowing, protocols where, like, you deposit in and you earn a passive yield on your collateral. And then as it grows, you can inherently borrow more. I mean, it's going to be very slow moving depending on how much you put in, but it does grow.
It's going to be very interesting to see how this is all classified. But from what I've heard, you can treat all of this like stocks. This is according to my lawyer. You can treat all of this like it's a stock so far. So all the yield you get in ETH or whatever it is, you consider it like a reinvested dividend, right? So you're essentially just purchasing more stock back. So you don't have to pay taxes until you realize gains, until you sell that asset. As long as you keep it in that pool, you have yet to realize gains.
That's
so
what I'm
short-term
actually...
and long-term capital gain. There's a difference, right? So yeah, this is where my Series 7 comes in handy, right? Short-term and long-term capital gains, they're taxed very differently, right?
Yes.
And the thing to keep in mind is you like, if you're going to realize a profit, obviously something jumps up 100% and you want to sell it, you're not going to be like, am I going to get taxed on this? Like at 20%? Who gives a shit, right? It just jumped 100% in 2 days. You're going to take that profit. So assume you're going to pay tax on that. But when you look at long-term, and in the eyes of the U.S., that's a year or more, right? Other than a quote-unquote qualifying event, you're going to have to pay taxes, but at a lower rate than you would a short-term gain tax. But it's something to keep in mind in terms of if you're buying a house, that actually qualifies as a qualifying event to where you can offset your essential tax liability for your first home purchase.
Yeah, and that gets into the territory where after you do your first, then you can start doing a 1031, and then it allows you to kind of translate your money to where you can get to the point where you really aren't paying a lot in taxes. But there's the whole gray area in between when you sell your cryptocurrency and when you convert that to cash.
Correct.
Because to them, it's still technically like selling stocks, although there are laws in place that allow you to sell your stock and reinvest it into the U.S. economy, whether it's buying back more stock or it's putting it into real estate. But those laws don't exist for the cryptocurrency market as it stands right now. Now, what really sucks, which we can all agree on, is according to the government right now, we all have to pay taxes every time we convert one currency for another. So when you sell your NFT for Ethereum, this is where things get a little fuzzier again, because technically you purchased your NFT in ETH and you're selling it in ETH again. Right now, the government is classifying NFTs as a collectible, as a trading item. It's a non-commercial asset. So that's going to change. I think we all know that's going to change because of what's happened within the past few months. But no one really knows how that avenue is going to be distinguished on, how it's going to be classified. I mean, it might go back to the whole cryptocurrency asset tax classes, or maybe they'll represent it to something like taxing real estate today. But there's going to be none of these tax break laws in place like we see in the real world. So this goes back to what I was saying. Assume you're going to have to pay taxes on every single dollar you profit off of. Your full tax bracket.
Either that or have a lot of money for a good lawyer.
It just comes down to like how much risk you really want to take on, like personally, like we're in crypto, which means no matter what, we are taking on a level of risk just by being involved. It's 100% the Wild West. So if you're doing things in crypto, like you are going to be going into unknown territory. And I think it's very important to keep that in mind. But it's fun as hell. I'll say that.
Dude, I've been trying to explain this shit to my accountant, and he's like ready to jump off a bridge.
You should have seen me trying to explain it to a mortgage broker.
Oh my God. Hey, Squirtle, we're also going to have mortgageable NFTs.
Dude, it's coming.
Yeah, no, we've got the tech for it. We're having mortgageable and rentable NFTs in our protocol. But what I really need to do, to be honest, is I can't stress the importance enough of finding an accountant that specializes in this industry, because your regular accountant isn't going to be able to give you the tax breaks because he's got no fucking clue how this industry works. Sure, you can tell him how the classification of each asset, what it is, and maybe he can figure something out for there, but he or she is not really going to be able to save you any money because they don't understand the ins and outs of the laws behind cryptocurrencies and NFTs and these assets. So it's definitely going to be worth the extra money to get kind of a crypto accountant here, because at the end of the day, you're going to need your CPA signature. Otherwise, you're going to be taking on all the liability for doing your own taxes here.
Hey,
what's up, Bugsy?
How's it going, Bugsy?
Dude, you just got my wheels turning. I can't stay quiet anymore. So thinking about this whole tax thing, I start to think about, like, I own a business, and I created an LLC, and I have to put a certain amount of money aside. I also have a full-time job where I make $200K a year. So any profits I pull from my business, I have to try to wash by buying new equipment or writing off mileage, all this different stuff.
Yeah, depreciating assets. Depreciating assets are a godsend. You buy a truck, you write it under your LLC, to have it depreciate over 5 years. Boom, the truck paid for itself. It's free. It's a depreciating asset. You need it for your business. It's the same thing now. Something very interesting that I learned with my meeting with the CEO of Bit5 the other day is they're now going to consider miners. I don't know if you have a miner, Squirtle, but you can now write a cryptocurrency miner off as a depreciating asset over a period of 5 years. So it's free. If you want to mine Bitcoin, for example, the mining equipment's free. You get 20% reduction on the cost of it every year for 5 years, and then it's free. It's a tax write-off.
And here is where we're going to see the increase in partnerships, LLCs, and corporations. This is where you're going to start to see actual businesses form around crypto to be able to write off the photographer, the videographer, the artist. You're going to start to see all this stuff being written off to offset these taxes, so that way you can actually walk away with some kind of gains instead of the government taking 70% on every fucking dollar you make,
Yeah, and this is where it's going to get hairy. Like for me personally, as you guys know, I paid for Figma design and all these other things. So how it's going to incorporate and work for maybe as a potential tax write-off or not is, a reason why I especially am going to need a tax accountant. Because, how this is going to work legally with the implications of, the whole setup of the entity and the money we're sending to consensus and all these things, which is hopefully why I'm trying to make it so I can pay consensus in ETH, because that makes it simpler for me, according to my attorney and accountant, because I can just write that in as, hey, this payment isn't for me. I can make it set everything up so the DAO sends that money, and it's a decentralized autonomous organization that paid that entity essentially. So this is why, why I'm making the profit a nonprofit project is, one, because I believe in the nonprofit entity and everything like that. But, it also helps with any future potential regulation. The last thing any of us want to see is Solon getting a subpoena from the SEC, and that's why
That's
it's important to keep decentralized and to keep kosher in this industry. And that's why I'm going to make it so the DAO has control of all these aspects. One, to enable people to be able to control the outcome of the system. And this is what I believe decentralization was created for, and the purpose of blockchain, but also to keep it so, the government doesn't have anyone they can come in and point a finger at.
and they want so bad, more than anything else, to stick their hand in this pot and be like, hey, we need a piece of that. So you know what you do? You send them a seed phrase to a wallet and say, here's a couple ETH, figure it out. There you go. There's your payment. Good luck.
Yeah, I mean it's coming. It'll be a relentless kind of back and forth between the space and the regulators, and hopefully it works out for the best. And I'm a hopeful person and an optimistic person, so I believe it will. One thing I wanted to kind of run it back to. I do want to reiterate, none of this is financial advice. We just are interested in these subjects and we love to talk about them. You should definitely do all your research if anything that we talk about strikes your fancy, or you feel like you want to look into it further. So definitely DYOR. But I wanted to run it back to like saving for taxes. Now, I have a very simple strategy. I'm just a beginner, and I would love to hear if anybody would volunteer their strategy. But when I take profits, my crypto or NFT profits, they go into a interest yielding account on BlockFi. Currently, it's 8.25%. For any amount of USDC below $40,000, and then it goes down a little bit once you go over $40,000. But it's a pretty good yield, and what you can do is you can set where you want that yield to go. So I have all of my cryptos on BlockFi, whatever yield they earn constantly. I have that going towards Bitcoin. So every month there's a small Bitcoin purchase with that APY yield. So that's currently what I do with my profits. They are in stablecoin earning interest. So I'd just like to hear what y'all are doing.
Go ahead, Squirtle. I was just going to say, I'm curious if someone could use NFTs as, let's say, they have made gains, but then they turn those gains into NFT purchases. Could they essentially offset their taxes until they sell the NFTs and realize gains there? I'm just curious if that will be a thing that anyone could do right now, or maybe something down the road.
Gray area.
Definitely,
Gray
yeah,
area.
it's definitely a gray
Gray.
area, but it'd be a good question.
It's probably a taxable offense, guys. If you
That's what I was thinking.
So, hey, I just have one comment on the tax issue. Is I use a tool called Token Tax, and all you do is essentially it's got APIs to all your different wallets. I think it's only ETH only, but essentially it spits out a report that you can attach to your taxes. And so I've done that the last couple of years. I mean, it's an absolute incredible time save. So now, if you haven't looked at using a tool like Token Tax, highly recommend it.
I
Thank
think
you,
there's
Johnny.
another one, right? Zen Ledger or something like that. I think
Yep.
is like the one that I saw.
Zen Ledger is really nice. And also to your question, John, it's interesting that you went with BlockFi as your safe haven for your profits. And I say interesting because it's in that centralized realm, right? And each person's going to like weigh their own like risk factors in their own way, 100%. Is that accurate to say, John, that like your risk assessment was like, hey, I trust it over here more than I trusted it in a protocol?
That's true. Yeah, I just have I don't have much experience using decentralized protocols or any at all, really, other than doing that. So for me, it was just kind of like, hey, it functions and looks like a bank app. I'm very comfortable with the way it flows and functions. It's very easy for me to use. So that's what I used. I also use Coinbase, and I basically split up all of my crypto and money between the two, just so there at least there is some sort of fail safe should something happen. I also know with Coinbase doesn't back up your entire balance. They only back up what you have stored in stablecoin, I believe.
Yeah, so it came from a source of comfort then, like what you're comfortable doing, and not like
Correct.
Yeah, because
correct.
And I think that's also really important to remember for a lot of people that are getting into crypto and like all the newcomers that are coming in through NFT, stuff as well. Is like the comfort isn't providing liquidity on like UniSwap or SushiSwap and stuff like that. Because like from my end, I'd rather take a 2 stablecoin pairs and provide liquidity on say like Sushi or on an L2 or something like that, right? But that's my own personal preference and really trusting like the protocols that I'm interacting with and the audits they've been through, and things of the sort. At the same time, it would also be really cool to be able to have like a really stable and trustworthy, bank where I could get the equivalent yields that I would get within DeFi, which is where you get those in betweens without those like 8% on BlockFi. And I think like crypto.com is like 12 or 10%. Coinbase is going to have their own stuff like that. But personally, I'm a huge fan of providing liquidity on stablecoin pairs and earning yield that way and trying to get up towards like 20 to 30%.
Definitely listen to Squirtle, guys. It is good advice. Obviously not financial advice, but keep in mind, I would do it if you could with decentralized stablecoins because why they have value and where the value is because you can see it on the blockchain where it's backed. But if you're providing liquidity for 2 stablecoins, obviously the value of them is always going to be about $1, because they're pegged to the value of a US dollar through the translation of their assets. So there's basically no risk there because you don't have to worry about impermanent loss as the price of those stable coins isn't going to fluctuate really. So essentially you're just keeping your US dollars, but you're also making an annual % return on trading fees associated with their stable coins while providing the liquidity in a place like SushiSwap.
So so there's 2 things that you said, JC, that I think we should clarify for everybody. And again, it's not the whole financial advice thing, but number 1 is pegged, right? What the definition of pegged is, right, to the US dollar, right? What's the difference between pegged and tethered to the US dollar? And the other thing is, like, what we're forgetting about also is custody. You have so many people that are on Robinhood that think that they own all this Dogecoin when they don't own a single thing.
Yeah,
literally
even actually,
nothing.
I'm not sure if you know this, David, but Robinhood doesn't even take care of their own custody. They have a custodian. They have a custodian they contract that actually holds the cryptocurrency. They have a decent setup of a mix between cold and live storage. But I mean, if you're going to purchase cryptocurrency, don't do it on Robinhood. They're opening up their wallets soon. But, just if you're going to do it, the safest centralized place to do it, in my opinion, this is my opinion, is Coinbase. If you're looking for a centralized place to put your money. Other than that, Kraken and KuCoin are both very cool. Binance has gotten fishier and fishier because it's not their fault. It's mainly regulatory issues and problems with China. But some cool information. I'm not sure if this is public yet, guys, but I heard recently in a meeting.
Insider trading?
This is not insider trading, but Kraken is going public. Kraken is going public, so that'll be a cool IPO when that does happen. Because obviously, right now we have
financial
Coinbase.
Advice.
No financial advice, but it'll be cool to see because obviously we have Coinbase, which is now public. But it'll be nice to see competitor listed. I think they're going to be on the New York Stock Exchange. I don't know for sure where they're being listed, but it'll be cool to see.
It'd be interesting to see if they're going to do a direct listing. Sorry.
I don't know. I'm so sorry, David. After you.
No, I was just going to say it'd be super interesting to see like if they're going to do a direct listing like Coinbase or if they're actually going to like IPO and actually look to raise money, right? Because if you look at like Circle, right, and USDC, they registered under a state charter, not under a federal charter, because they didn't want to be under federal regulation. Because under state regulation, it's much easier, it's much leaner, it's much clean. Like for them, they have much more leeway to do things, right, than if they were to say be under federal jurisdiction, right? And not a lot of people know that, right? Like I think that's an important distinction to make too. Is are they under a state charter, or are they actually, do they fall under federal, right? Ultimately, federal is going to have the ultimate say, but that just essentially extends your timeline, right? To, hey, we got to, I guess, create a law for this, or we got to put this to the House or the floor.
Well,
But
I
I think
think
that's a super important thing to know.
I think we all know federal is just so behind in terms of development of these things. You know, the feds don't even know a lot about what's going on. And what's important to realize here is states are kind of going forward and breaking this ground on their own. Like now we have Wyoming and Vermont where DAOs can own LLCs. And it's going to be interesting to see the government's response to this action because, you know, the ability to make it so a DAO can own an LLC kind of just enables that point of, hey, this is a decentralized organization, an entity where you have no direct person you can go after and you can't shut it down because it's going to live forever on the blockchain. And now they can own physical real world items. So, you know, what do you do there?
It's like a shell. It's like a shell of a, it's ultimately like, it's what's been done for ages, just in a different way, right? But now it's being done by not just the people with stupid amounts of money, because when you look at like SPAC deals, right? They're or like, it's literally a shell of a company that has a management team that has $700 million that goes out and looks for a business to then back into that company, right? It's ultimately going to be the same kind of deal, but the law is going to catch up eventually. But that's why now,
well, yeah,
the wild, even though we said the Wild West,
it's no longer fishy because, you know, now it's open and accessible to everyone. In theory, obviously, people need to get in the space for it to be accessible for them. You know, we need to lower that educational barrier to entry. But, you know, it's now a resource that's available for everyone, not just the super rich. What's up, Johnny?
Yo, what's up? Hey, I got a quick question for you. I'm kind of running out of time before I'm gonna have to drop, but can you just kind of talk a little bit about your platform and what you guys are building? You know, I just kind of caught the tail end of it, so I'd love to hear a little bit more about. I think it's Solon.finance,
Stolen
but
DeFi, Solon gang. Yes, sir.
Yeah. So,
all right, yeah. Give me
Johnny,
hold on. I got one question for you guys.
yep.
So it looks like you went ETH as opposed to Solana with the Sol tag. So yeah, let me know. I'd love to hear more. Thanks, guys.
Yeah, so
The
our protocol is going to
Greeks.
be built off ETH and Polygon, but we're a new form of automated market maker, basically a platform like UniSwap or Balancer. But our technology, you can kind of think of it like UniSwap V3 combined with Balancer V2. Basically, all you need to know is we're creating the world's first network of decentralized hedge funds where anyone can create their own hedge fund or anyone can invest in any fund. And it creates a system for the first time ever where people who are experts at running liquidity pools and make millions of dollars, or expert cryptocurrency investors or expert NFT investors, can not only make money off of managing their own capital like they normally would, but can also make money off of other users' capital. And there's no risk because everything's held on smart contracts. You know, they don't actually hold the users' funds. So basically, the way it works is users just select whatever pools they want to enter based on the person's name and their yield and all these other things, and they just deposit money in. They can use any cryptocurrency, and it gets automatically converted into the assets they selected through our decentralized exchange, and they can just pull it out whenever to realize their gains. So that's it at the core. It's basically, you know, the world's first network of decentralized hedge funds. And then aside from that, we have a decentralized NFT marketplace where you can buy, sell, and trade NFTs, but we also have rentable infractional NFTs as well as mortgageable NFTs in the marketplace. Everything's decentralized. And then on top of all this, we have a hardware product that will work hand in hand with our ecosystem, which is going to be a direct read write to the blockchain that will allow anyone anywhere to not need to know how to do all the bullshit of copying and pasting your MetaMask address, typing in your bank account info, connecting to your Coinbase, downloading MetaMask and trying to get to OpenSea, which we all know how painful that was when we first joined, or trying to, you know, convince someone to work through the process. Instead, now they can just use our hardware product to scroll down, select whatever NFT they want to buy or whatever cryptocurrency they want to buy, and they just tap their card, and that's how they pay for it.
Did you speak on IL or no?
No, so basically, I tried to keep it as simple as possible, but impermanent loss is...
That's just a big deal.
Yeah. So we've created the first system that allows people to completely mitigate impermanent loss. So that's where we have, you know, we saw that and we're like, hey, what's a good use case for this? And we're like, well, we can create the world's first network of decentralized hedge funds. Because without impermanent loss, essentially, which is the only risk in loaning out your money to a decentralized exchange, you can invest in the underlying assets without having to worry about impermanent loss. And in addition to the profit you make off the underlying assets, you can gain a small additional annual percent return in trading fees. So it's like you're holding the assets like you normally would in your wallet outright, the same amount of risk there. But on top of the money you make or lose from those underlying assets, you gain an additional annual percent return in trading fees associated with those assets. What's up, Air?
Yo, I always come up here. I don't have questions. I just say hi, and then you talk, and then I have questions. You mentioned the hardware wallet. Just curious. I think last time, like I asked about it. You said prototyping stage is December. You're working on it in conjunction with Northeastern. Is that correct? What's the
Yep.
status
So
on that?
we've got a team of about 5 engineers, and I oversee the project, but I work on it hand in hand with them. The prototype will be completed in December. We're hoping that we'll be able to reach our reach goals, which is one of the things we want to do eventually is throw a small solar panel on the back of the product. It's going to have an e-ink screen, so it only refreshes every time you click a button, so it's going to be really energy efficient. But we want to make it so people in areas that may not have access to electricity can just chuck the product out into the sun when it dies and just let it charge up a bit. So that was one of the things, but that's more of a reach goal. The prototype will be done in December, and we're going to send a few prototypes out to members of our Discord community in January, hopefully, for field testing. And then it'll go out for manufacturing for production in July. We'll have it mass produced, hopefully.
Thanks for the update. That's awesome. And then, if anyone else has any questions, feel free. I just I had a question for everyone. We were going back to the discussion about kind of regulations and what's going to happen. Someone mentioned, the Coinbase lawsuit. I'm actually pretty bullish on that lawsuit. I wanted to see what other people thought, but I work in a heavily regulated field. I work in pharma, med device, so I deal with the FDA all day, every day. Not the same as the SEC.
They're fucking stricter than the SEC,
from what
if
I
you
hear.
ask me.
To me, SEC, so like FDA actually regulates. SEC is a bunch of lawyers and, people with money, lawyer up and they get things done and they regulate by litigation, which is not what the FDA does. The FDA will come knock down your doors and lock you up. But I was pretty bullish on that because to me, it indicates that they want to get this in the courts. They want to get this conversation actually going in the courts because the U.S. court system takes forever. I'd love to hear what people
I agree with you,
think
man,
about that.
but I'm not sure if you saw, but what Coinbase did with their lending program is before they even created it or released it, at least, they contacted the SEC beforehand to be like, hey guys, we just want to make sure we're doing everything kosher. If you have any questions or comments, just let us know. We just want to do this by the books. And then the SEC didn't reply to them for months. And then all of a sudden, out of nowhere, they're just like, boom, lawsuit. They had yet to even deploy the products in the Coinbase ecosystem. And then Coinbase came out on their public Twitter account was basically like, fuck the SEC. This is what they did to us. So I think the case is going to get dropped.
Yeah, I did
mean,
see
it's
that.
bullshit.
Yeah.
And to be honest, after that happened, everyone was like, okay, the SEC is clearly just taking money from big banks because this is going to kill big banks. Imagine telling everyone in the world they can earn 5% annual percent return off their US dollars. I mean, you can just use Coinbase like a bank account, and Coinbase is now FDIC insured.
No,
it's literally better than any.
So
100%.
So I saw that, and honestly, just think Coinbase, tried to do the right thing, but they're not playing the right game. That's my opinion. Like,
well, they're playing it.
Like,
they're playing
my
it
opinion
safer
is
than
they got
everyone else.
invited to play the
everyone
game.
else playing the game just kind of does it. They put it out there, and then they're like, "Hey, if you got anything to say about it, you can say it, but we're not going to even contact you or mention it." And that's kind of, I guess, where you could say Coinbase slipped up was by asking the SEC, because anytime you ask the SEC, they're going to be like, "No, fuck you, we're suing you."
Exactly, and that's what I mean by they regulate by litigation. Like in the FDA, in my industry, like you're an idiot if you don't try to get a meeting with the FDA to kind of make sure everything's kosher, especially when you're doing something that's novel and new. crypto like to the everyone is novel and new. So like Coinbase, like I like that they did that novel and new. Hey, let's make sure we tidy everything up. But I'm not wasn't surprised at all, and I'm kind of astonished that they haven't gone on the offensive. I would
Yeah,
you need to get in there.
they're
Anyways,
definitely going to beef up on their lawyers, but I think something people always forget is the SEC is a civil regulatory organization. So I mean, they can't give anyone here jail time. These are all fines we're talking about potentially. And like I said, it's just potentially. They're mainly just trying to, put a thorn in their backside. And in my opinion, it's really just like they're trying to halt the process and see if they can get any traction in the other direction, because I honestly think they could be in the pockets of big banks and central organizations, because why the fuck else would they do this?
oh definitely. Definitely.
I mean, look
I
at just
think
Levy.
there's
Everyone's in the pocket of someone or other, especially with like basically the entire government's run by corporate capital.
I think that there's also just a symptom of like I always, it's easy to kind of go down like really complicated rabbit holes of like, oh, they're in this bank's pocket, they're in this bank's pocket, stuff like that, right? But I think it's a lot more simplified than people think. I think it's just they don't know what to do, and they're just going after the biggest player that they can, just to kind of get the ball rolling a little bit, because they could have gone after like Aave with ARC and their stablecoin offerings, or Compound, which is they have their centralized stablecoin offerings as well.
But then Gary Gensler doesn't make a name for himself.
Sorry, what was that?
I said, then Gary Gensler doesn't make a name for himself as incoming SEC chairman.
Oh, that's
you know what I mean? It's like, let's go after the biggest bully
You
on
guys
the block.
got to keep in mind.
But I mean, like,
they don't like to do a lot of these things in the first place if they know it's not going to work in their direction, because there is a huge political factor in it for them. The SEC kind of has a reputation that they somewhat have to uphold. It's when like the general attorneys and things like that get involved. That's when shit is serious, because they won't give up their fucking reputation for anything. Right now the SEC, they like to come in and just stir the pot, like you're saying, Squirtle. So, I mean, I don't think this is really going to go anywhere. I think they're just going to try to stir the pot, and everyone's just going to fucking laugh at them. But I guess we'll see what will happen.
Yeah, but think about the XRP. Think about the XRP.
Well, that was a lawsuit from.
Like, that's not actually against XRP.
Well, that's not.
It's
the
actually
SEC,
against
though.
one of the guys.
That was the general attorney in the state of New York, or what was it?
In New York, yeah.
But that's a lot more serious than any action from the SEC. Keep in mind.
Well, either way, I think we like everyone can keep theorizing on like why it happened, why and stuff like that. But at the end of the day, there has to be a fundamental shift in how they regulate, or they won't be able to keep up with crypto and DeFi and the innovation that's here. No matter what, like ETH is made to find a way. It was I think it was on the Bankless podcast. It was a really good comparison of like ETH is like it's just water. It finds a way to get around whatever obstacle is put in front of it. There has to be a fundamental shift in how regulation operates and how they track everything, and that will take forever. So I don't know how you want to take that, but it's something to think about.
I mean,
the longer they take, the better off we are, though. I think the more innovation
can happen. I used to do a lot of work for the government. And another thing that's really important to keep in mind here is none of these entities actually communicate with each other. The FBI and the CIA don't talk together. The SEC and all these organizations, they don't talk together. CBP and, any of these organizations, they don't fucking talk to each other. I mean, for most government entities like this, Monday and Friday, they don't fucking work because they're quote unquote travel days. They don't communicate with each other at all. They're kind of like their own little frats, as weird as that sounds. And
that's a good way to word it.
Yeah, thank you. But, it's right now, from what I've heard, is the government is working on developing its own cryptocurrency to eliminate bank transfer costs. When they sent out all of your checks for, COVID relief, they got to pay banks and they got to pay entities along the way for all these transactions and wire transfers to clear and blah, 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 and you name it. So what I've heard from a certain member in the Discord who has a pretty close connection to all this is the government is essentially creating their own currency to eliminate all the money they would have to pay to banking organizations. So any transfer they do, they can convert their US dollars to this coin and then send it and then cash it back into US dollars on the other side. And obviously, if they do this, regulations are going to have to get somewhat softer or more narrow in the least. They're going to have to come up with some real fucking definitions, because otherwise they're just going to be the world's largest hypocrites.
Facts. Any
Yeah,
public
my
entanglements are just like an attempt to kind of reduce their deficit in knowledge, because they have no idea what the fuck is going on in the space. So they just want to tie themselves with the space out loud. Some of them for their own personal gain, but some of them obviously because they have like this righteous, deep rooted desire to prove that they're on the side of justice and everything that's not on their side is evil. So yeah.
That's why, yeah, you're right. That's why I think institutional adoption is key, because as long as we have institutional adoption and Visa building on layer 2, right, and all these other things, and now Bank of America, right, on the Pax blockchain, and Stellar signing today a deal with MoneyGram, right? The more institutional buy-in we have, the more like flexible the government is going to have to be, because at the end of the day, it's you can't have your
You're
cake
right.
and eat it
And
Thank you,
too.
hey, at
David.
the end of the
Period.
day,
That's such a good
our
point.
lobbyists and people in Senate are getting fucking sponsored by these people, by these organizations, by these entities like BlackRock, who just, they're investing in Bit5, which is a fucking crypto Bitcoin mining corporation. All this shit is going to work out, but at the end of the day, still, it's a bunch of 80-year-old white dudes, which is what I like to say anyway, that make the laws about this. And obviously, they don't know fucking shit about cryptocurrency. The last lobby they had about cryptocurrencies was called Cryptocurrencies, What Are They Good For?
It's like, did you guys see the senator there? And he goes, ma'am, are you going to take care of this Finsta problem? Are you going to take this product down? She's like, Senator, I have no idea what you're talking about. Like, Finsta is not a product that Facebook offers. Like, he literally thought Finsta was the actual app.
Yeah,
Crazy.
and all of these large, well, I would say more old guard players, like for instance, Jamie Dimon, CEO of JP Morgan, he 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 completely changes his stance like once every 8 months, and most of these big players do that. They're like, crypto has no intrinsic value, and then you see some type of headline come out that says that they're getting into crypto. Like things like that happen.
You're right, Iman.
yeah. As
What's
soon
up?
as
Sorry, Aaron, I cut you off.
I was just gonna say, sorry. Last thought, then I'll shut up. Yeah, I was just gonna say, yeah, I see that, and I just see the traditional wealth sees, oh, there's actual fucking money to be made. We need to do that, so we can't shut out retail, but we're gonna try to. But at the end of the day, like whoever said it, it's like water, and they're not gonna be able to shut out retail. So they gotta get their own shit together so they can join the party.
Yeah, tech always finds a way.
What's up, Bugsy?
No, just a thought. I don't know if this is directly tied to what everyone was talking about, but back into the real world here, when you own a business, if you do some kind of donation to an accredited place, you tend to have one hell of a write-off. I don't know if that's going to be something we see in the future too, to where you split your gains to where you donate to certain organizations or something. Also, I was just curious people's thoughts about that.
I think that would be a nice way of incorporating some sort of tax write-off within the cryptocurrency industry, because one, it benefits charity. Who can argue with that? And two, it helps the individual. I think that's a win-win, but God only knows how the government's going to see it, or if they're going to get to cases like this within the next 5 years. All this is going to take so fucking long. And back to what you guys were saying about the CEO of JP Morgan. Not too long ago, he was saying cryptocurrencies have no value. The reality of it is these people don't know shit about cryptocurrency. They don't understand why it has value. They don't understand the technology. They don't understand blockchain. They hear about Bitcoin. They're like, oh, this shit is just a store of value. It only has value because people put money into it. Well, that's not the case for Ethereum. ETH has direct value because in order to use all 8,000 plus ecosystems built off of its blockchain, you have to pay fees in ETH. That's a direct value proposition right there. And they're just starting to figure this shit out, let alone, the ability to see what things like smart contract development and decentralized exchange and MakerDAO and all these platforms do to change the world of current finances and to eliminate things like legal fees, custodians, all these other fees that are going to arise, and to eliminate risk proposition.
But that's the thing. Jamie Dimon can say all he wants and change his stance all he wants. But when every other institution is going to get on board, and he might be then Like he can't afford for Chase to be the last, right? He might be the innovator.
Chase will be
but
last.
He can't afford for Chase to be the last one. Exactly. Like, he can't afford for that, right? Because right now, Bank of America, like when I was on the trading desk, it was T+2 is how trade settled. Bunch of paperwork, the whole 9 yards. Bank of America is now on the Pax blockchain where you're settling securities in seconds as opposed to days. Like, that is a huge deal. And this is one of the biggest banking institutions that we have. So Jamie Dimon can't afford to do it. In my opinion, we are past the point of no return. And it's either you get on board or you get left behind.
And I think
Period.
there's a big
Adapt or
difference
die.
now too, because like people have seen tech eat industries before. People have seen Kodak get destroyed by the digital movement of taking photography. They've seen Facebook like take over like basically any type of news, right? Like banks know that they will get eaten because they've seen it with other industries. So I think like it's inevitable in the end. But also I got to bounce here in a minute, but I just kind of wanted to leave on something real quick. Was how fucking valuable is Ethereum? Like you have Visa on L2s, like building on L2s. You have an entire financial system being built on top of it in a decentralized way. You have like other competitors coming up, like with Sol, and you'll have your other like L1, like ETH killers or whatever. But none of them have the Lindy effect that ETH has, which is kind of fun to say after like 5+ years, or 4+ years. But like, why isn't everyone trying to get 32 ETH to get a validator node?
See, but Squirrel, Wealth came up with this genius idea of how to use our protocol to create fractional node ownership. So this way, you don't need 32 ETH to have a validator node for ETH. You could have 0.001 ETH and own 1% of that validator node.
Well, for sure. I think there's just also like a cool aspect of just having like your own validator node.
I know, it's so sick.
You know,
do you have a validator
having
node?
your own?
How much money can you make from a node, from an
lot of
Ethereum
money.
node?
You don't
Like,
even
is it
want to
like
know.
Fuck
stupid?
ton, bro. Fuck ton.
It's
No
a fuck
Tell
financial
me.
ton of money,
advice,
bro.
but a
Yeah,
fuck ton.
no financial advice,
So-
but you
Like a
want to
Bored
run
Ape?
an Ethereum
Fuck
node.
ton?
No, not financial advice. But
That's for
yeah.
sure.
You want to
the
run
main
a
thing to
strong
take
Fuck
away.
ton, bro.
Yes,
You
strong
want to run a
blocks.
strong node.
Wealth
I'm
is the
telling you.
expert.
The question
Wealth is the expert.
the question
so
is
listen to him.
what types of vehicle structures will be formed around things like Ethereum notes that kind of give it, I don't want to say, I mean, this is a bad way to word it. Someone may be able to add a word on that's better, but more of a centralized way of providing or offering its value proposition.
It's already
It sounds like
like
Lido.
that.
Oh, I'm sorry?
What was that, Bully?
I
Sorry.
said it's already basically like that, bro. Anybody could get a node.
Yeah,
I know
I mean,
nothing about getting a node. How do you do? Like, how do you go about it? Like,
Yo,
So there's setup instructions right now. Like we're not at ETH 2.0 yet, right? But there are very clearly laid out instructions on how to set it up. You do have to have technical knowledge on interacting with command line and stuff like that. Make sure that you can provide like a stable environment for your connection to the internet. Make sure you don't have downtime.
So you can-
but
you
even
can-
just on
you-
the value of having a node, like the main thing to consider, and I got to run after this thought, but like consider that Ethereum is going to be going deflationary next year.
Already is though. It's already is.
Yeah,
It's been running
it's already
even further.
1.55.
Coinbase
even
burns
further
through
though.
close to
It'll
250.
Even
be
further, because you get rid of the rewards being distributed to miners right now. Once those rewards are taken away, and you get deflationary,
Squirtle, it's not really going to be that deflationary because you're going to still have rewards being rewarded to stakers.
but it's a less there's a lot less issuance with those rewards. So it takes like barely any activity on the network. Not barely any.
There's not a
you know
lot
what I
of
mean? But like,
issuance. The issuance is about the same because the TPS is going up much higher.
you sure?
Yeah,
I read about,
it's about
I read about this yesterday. I read that Coinbase burns like 250 ETH a day, right?
You
And they did
can
a whole
watch it
analysis
burn.
on like the legacy.
Yeah,
system.
you can watch it burn. It's
Yeah.
fucking
I love
crazy.
watching it
I
burn.
do
That's
too, man.
that's one of my screensavers.
I'm researching real quick before I got to bounce.
Yeah, no problem.
Does anybody have a link to like running a node, like an ETH node?
Yo,
That they can share?
Wealth
Don't
Dad.
run on this, but the earlier you want to run a node, the better. Like if you can get in earlier, the better.
For sure.
I'm gonna go sell my I'm gonna go sell my Bored Ape and fucking buy a
Yo,
node.
I'll
If
buy it.
anyone
Look.
buy
I'll
my
buy it from
NFTs.
you. I'll buy it from you, and I'll give you the node tokens. Yo, it's bully. Just
That's
DM
a
me.
good deal. That's a good
Look,
deal.
I'm
right
scooping
there.
up all Bored Apes.
Not financial advice.
You know what I'm saying?
I got to bounce,
Bully,
but I'm
let
going
me
to
do
dig
my
into
homework.
this issuance thing because I'm
Adios.
still fairly confident that it is like a fraction of the current issuance. But I want to dig into that.
Yeah, I mean, I'd love to hear more about it, but from what I understood of the operation of the beacon chain, it would be about the same.
Yeah, I'm going to dig. But hey, y'all, it was great talking.
Thanks
John,
for hanging out, Squirtle.
Thanks for having me, John. I really appreciate it.
Cheers,
Yo,
man.
thanks for coming, Squirtle. See you, man.
Peace. Go watch
Thanks,
Deadheads
Squirtle.
episode 2.
Yeah. But yeah, David, if you wanna easily deploy nodes, you can do it with a protocol like StrongBlock. They're a node as a service provider, and they have a different approach where they reward the node owners with their native token, the Strong.
What's the intrinsic value of the node
Appreciate that.
based on? Like versus
Well, what's the intrinsic value of Ethereum, right? It's everything, that's all the application that it has.
You're
yeah, but
holding
I
the
mean more
ledger.
so.
You
Is
get
it is
paid to
it
hold
like
the ledger.
comparative to like a bond?
Basically.
Yeah, I guess.
No, you're contributing to the
Yeah.
decentralization of the network,
So
right? The
Hey,
more
basically, yeah.
people there are, like you don't want to have it in one place. Like they're essentially you can't have one central or two or three or four central points of contact. When you have thousands of different nodes, that means your network can ultimately never or theoretically never go down. Am I wrong, JC?
No, so the problem is, let's say you have two nodes, and someone in one of the nodes changes the data that says, hey, instead of 10 Ethereum being sent from this address to this address, that address sent that 10 Ethereum to my address. And basically, if there's only two of these nodes set up, with only two of these ledgers, how are you going to prove which one's right and which one's wrong? Compared to, let's say, if you have 100 of them, and there's only one ledger that comes up and says that, well, all 99 will get together and say, that's fucking bullshit, let's kick him out of the network. And well, in this case, it's obviously a lot more than 100, but it basically goes to ensure the security of the ledger that Ethereum is, the blockchain itself.
That makes sense.
So can I ask a quick question about, I don't mean to change the topic and you guys can discuss this, but I'm just curious whenever you guys get a chance, I would love to hear the difference between the types of like NFT coins. Like what's the difference between a 721 and an 1155? And what are the different types of actual like NFT coins out there, I guess, if you will? Or how are they represented like on the blockchain? And what's the difference like utility wise and everything else?
I'm sorry, brother. I didn't even hear your question. I'm trading.
I can speak like high level to it. I'm definitely not an expert at all, but 721 I've been told and I believe is like gold standard for an NFT, because it identifies exactly what like that token is on blockchain. I think it's the best for kind of pairing your wallet with that underlying artwork or file or whatever is the underlying part of the NFT. And then ERC 1155 is more interesting. It has, I think, honestly, I feel like
it allows
utility
for
1155 is still like kind of being discovered.
Yeah, I agree with you. 1155 just allows for dual purpose interaction. So a regular NFT is like singular purpose based interaction. So essentially, you're
real life meaning what?
I mean, you could equate it to like essentially you could think of it as like two functions it has. Like it's so like a regular NFT you can use as a key or a pass for blah 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 blah, while 1155 you can use as a pass for blah 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 blah, and you can use it as a form of currency, for example, potentially. So it goes back to what Ara was saying. You know, a lot of the use cases and are have yet to really be discovered. You know, people are really just starting to come up with use cases for 1155. And, you know, we are in the wild, wild west
How
here. People are really coming up with new things every day.
Yeah, so I guess my question is to relay it to real world scenario. Like, how does it play when it comes to, and John, I think this goes back to our ever loving question of, like, when we talk about art, fractionalization, everything else, like ownership versus like royalties and so on. Like, how does that work for like the creator, or whether it's an artist or whoever, or the owner of said, you know, ERC 1155? Because it sounds like it's trying to be the best of both worlds, and I'm curious what experience you guys have with both, and is it beneficial? I guess I kind of want to know, what do I need to be on the lookout for? Like, what's the
Well, what you got to
downside? What's
keep
the
in mind here,
upside?
David, is essentially you can use an 1155 like an NFT, but you can also use it like a currency itself, like a cryptocurrency. And that's where the dual functionality comes into place here. You know, it's also good because it helps essentially lower and facilitate gas costs. I don't know how the code itself works to do that, but you know, this is the basic makeup and structure of it. Now, people are really just starting to come out with cool use cases for 1155s, but they're not the standard. 1155 is like an ERC20, a 721, and a 777 combined.
So the Solon NFT, like the NFT pools, are going to be, as of right now, like per like pre-audit. Like, are you guys only doing 721s?
No, we'll have
like
721s and 1155s, but you got to keep in mind when they're in these pools, and let's say someone needs to cash out funds, we got to keep these pools liquid so people can cash out at any point in time, and that's when they get turned into fractional NFTs. So when this 721 or 1155 is turned into a fractional NFT, what happens is that 721 or 1155 is sent to a smart contract, and it's held on that contract, and the contract returns X amount of ERC20 or cryptocurrency tokens to the pool to give fractional ownership representation. So it could return like 100 Bored Ape Yacht Club 1155 tokens, and each one is worth 1%, or 1,000, and each one is worth 0.1%, for example.
Gotcha. So theoretically, like, so how does it? Shit, I forgot my question. Sorry. I just had a question for you. I totally blanked out on it. Sorry about that. But yeah, it kind of makes sense to me, where it's like, I just don't see how you have fun, like, because it's like fungible, non-fungible, and it's like, so are people that deposit their NFTs like into the pool, which then deposits it into or locks it into a smart contract, is the creator
They're sending
of
it to the
that,
contract directly.
let's say,
If they have the NFT in a pool,
are they do
or
royalties? Can they gain
off
royalties
a
on that like they
fractional
do now,
NFT,
or how does transfer of ownership work? Yeah.
that would be a question for Ben, not for me. As you know, I'm not the CTO. I'm not sure how royalties would work on a fractional NFT. Obviously, you can gain your royalties off the sale of whole 721s or 1155s. I mean, I'm sure we could implement some sort of royalty function on fractional NFTs, but I'm not sure exactly how it would work, so I can't speak to that.
I stumped the Swami. Oh my God.
I
I appreciate it though,
JC.
JC.
Yeah, once again, everybody, the floor is open. If you have any questions, comments, subject matter you'd like to bring up, we'd love to hear it.
I gotta bounce. I'll see you guys later.
All right, David.
See you, David.
Take care, guys.
Yeah, I'm really loving this financial literacy conversation, especially with the strong nodes. Are there any other, I guess, areas in terms of investments, staking, that you think a lot of people don't know about that you've encountered and thought were interesting?
Well, if this is a question for you, my man.
Oh, gee, sorry, I wasn't paying attention. Could you repeat that, please?
Yeah, I was saying, like, I enjoyed the conversation. You and I talked about strong blocks before.
Yeah, for sure.
Are there some other interesting, I guess, concepts for investing or staking that you've seen that you think are worth?
Oh, are you talking
Yeah.
about other than nodes or just nodes?
It can be either.
I mean, yeah, there's definitely a lot of projects out there. I'm keeping an eye on pre-search. They've been
There's a bunch of cool ones. You could use like Sushi's Bento Box, which is their lending program, which is
yeah,
similar to Aave, but it gives you better rates than Aave. Obviously, Aave exists. MakerDAO, there's plenty of protocols that exist for staking and yielding, whether it's just staking or creating liquidity for stablecoins, which you don't have to worry about losing money on those assets because it's always pegged to the value of a US dollar. But you could create a liquidity pool that has two stablecoins in it, so people could trade between DAI and US dollar coin, for example, and you would get a percent of the fees taken from those interactions. And obviously, that's an example where there's no risk if you compare it to US dollars. Obviously, US dollars have their own risk, and because the inflation at a rate of about 2.5% a year.
But the risk for that is the impermanent loss, right?
There's no impermanent loss if you're staking two stable coins together, because the value of each coin won't change. It's always going to be $1. The impermanent loss happens when the value of one token changes proportionally to another.
Do you guys stake?
It depends on the asset. Like right now, I'm personally staking my balancer tokens, just because it's got a pretty nice yield. I like the balancer ecosystem as I like it in the way, it has an nth dimensional value function, which is unique. You can create liquidity pools with more than two assets, but obviously at Solon, we're having liquidity pools that have concentrated liquidity and an nth dimensional value function. So you can have concentrated liquidity with more than two assets, actually up to about 2,000 different cryptocurrencies. But I'll do staking for
Whoa.
some things. It depends. You're going to only see ecosystems with up to 2,000 on Polygon because it's going to be too expensive on ETH mainnet. On ETH mainnet, you'll probably see like 32 or 40 maybe at the most, because of gas fees. But on Polygon, you could easily see up to 2,000. People are going to create automated programs that would trade and manage these liquidity pools automatically, which would be really fucking cool to see. So I wouldn't be surprised if those have thousands of assets in them.
Gotcha. I stake my Tezos Monday through Wednesday on Kraken because that's when the payouts come, and then I just let it perform in the market for the rest of the week.
Hey, I just realized I could use an education on Polygon. I'm well aware of it. Haven't used it a lot. I'd love to understand more of their decentralized setup. So I know it's a side chain, right?
Yeah. So
But
they're completely backboned, built off ETH.
yeah,
Sorry. I thought someone else was commenting on it. But they're always going to be more scalable in a direct proposition to ETH. So when ETH goes proof of stake, they'll still be sidechained to ETH. So when ETH has their 30 to 60,000 transactions per second, God only knows how much Polygon will have, because it's going to be like Polygon on steroids compared to what it is right now. Polygon's just great because of their scalability. In my opinion, what the future ecosystems are going to look like is more complicated protocols. As smart contracts get more complicated and are going to require more interactions, we're going to see governance in governance coins, their tokens on ETH mainnet. And we're going to see the deploy in integration of these protocols on layer 2 on the sidechain on Polygon, because Polygon's much more scalable than ETH is going to be, even when ETH goes proof of stake.
So how do transactions actually settle? Because it settles on Polygon, right? As opposed to
Yeah, they have a
an
bridge.
optimistic rollup or something like that.
Yeah, so they don't use ZK snarks right now or an optimistic rollup. I think they're working on that to essentially get their bridge time from, I think it's about 8 minutes to no bridge time. So, all transactions are just, you can kind of think of Polygon almost like a proof of stake type system.
Right.
All transactions are settled on copy addresses essentially to ETH, but it's within their chain. You have to bridge back and forth if you want to get back to the main net.
Okay, that made a lot of sense. Yeah, basically I understood the TLDR I've gotten, or formed at least from listening to a ton of shit, is that there is a security trade-off, but it's Ethereum's taking a hammer when you need, but if you only need a light tap, then you go with Polygon or something like that.
Yeah, Eric, it's a great question, because I don't know how they decentralize their blockchain, or even if it's a very decentralized chain, their side chain, Polygon.
I got to look into that personally. That's a great point. I would love to learn more about that. I mean, I know how their chain works from a fundamental standpoint, but I don't know how they allocate, control of nodes, for example, to keep it
Yeah, me neither.
decentralized.
Yeah, me neither. And I keep hearing from shit. I wish I could pull references out of my butt. So I just listen to it.
I know.
But
Me too. I'm like, who the fuck did I hear this one thing from?
yeah, yeah. I keep hearing the future is definitely people are all in ZK. It's not here yet.
ZK
But
snarks
right
and
now,
rollups are going to be a fucking godsend.
I think it speaks volumes. Polygon just acquired a ZK rollup tech company or something. So the fact that they're already acquiring shows.
Well, and you see VB is their poster boy.
Yeah.
But apparently they're going to have rollups for NFTs soon, so you can bridge NFTs between ETH mainnet and the sidechain onto Polygon.
Oh Lord.
Yeah, that'll be fucking.
Can you kind of explain what a rollup is?
A rollup is extremely complicated to explain. VB wrote a really good article on it, but it basically creates a trustless system in which converting between chains is automatic and trustless. So you don't have downtimes to confirm that assets can move from one chain to the other. Things can be instant, and you don't essentially have to worry about the validity of them.
I have a
now, is Polygon
up.
is Polygon a side chain or an L2 or both?
It's both.
Gotcha.
And a little analogy that I've learned that I tell people is with rollups. Essentially, with rollups, there's a packet that you can do all these transactions on, and when that packet gets full, they then send that to Ethereum mainnet. And so it's kind of like being super efficient with your transaction on mainnet. You're getting a huge roll up packed of all these smaller transactions that all individuals are using, and they send it.
Yeah, everything
so
gets bundled up, so you save on gas and everything, because obviously you have to pay ETH gas to convert from ETH mainnet to layer 2 onto Polygon. So I mean, since Polygon has gotten to the point where there's so many transactions on Polygon now, they can implement something like rollups, and it'll make sense because that rollup will fill up real quick. But other than that, I'm gonna have to head out now, guys. Thank you all for being here, and thanks for taking the time to be in this space. Thank you, John, for hosting. I appreciate all you. I got to get to my girlfriend's soccer game. It's the last home game of the season.
Awesome.
Yo, thank you, John.
Thanks, guys.
Thank you,
See ya,
CJ.
bye.
All right, bye, guys. Thank you all very much.
And I'll be ending the space, y'all. Thanks for being here. What a great conversation. Do visit us in the Solon DeFi Discord. There's currently a vote underway by the Bool, a very important one. So if you haven't gone and voted, please do that if you're a NFT holder.
Vote B.
Vote B, right. It's under discussion.
Where's the link to the Discord?
Oh, let's pin that up real quick.
You got that?
Guys, hop in my space after.
Fully, you got a space right now?
I'm about to do one in a second, like 20 minutes.
Right on. So keep an eye out for Bully. What are you guys going to be talking about tonight? Just whatever?
We're going to start with some art, some photography, and then go into some fucking DeFi.
There you go. Yeah, definitely visit the Discord. You can ask your DeFi questions there as well. All right,
pinned it up top.
Yo, Bully, don't get out of here with your upside down shit.
Yo, I'm so short right now.
All right, well, everyone better go over to Bully's space. Thank you guys for coming in, and have a great night.
Thanks, y'all. Ending in 3, 2, 1. Bye.